We begin, though, with our talk of the tape. New lows and beyond. Where stocks are really heading from here after taking out those levels from June, at least on the Dow. Joe Terranova, we'll ask him, CNBC contributor and Virtus Investment Partners chief market strategist, right here with us at Post 9. It's good to see you. Thanks for coming down here. We talked to you on the halftime report today as we were sort of in the game. Now we're, here we're on the sidelines taking stock, if you will, in what just happened. As I said, a new closing low for the Dow. Where do we go from here?
Well, I think you have to take a little bit of a good feeling about the way that we ended the day. This clearly had the feel of a liquidation type of an event. Trading volumes were very heavy. Volume was nearly 40% above the 30-day average. We haven't seen that in a while. Certainly you saw in Treasury yields a spike, almost a parabolic spike, move higher to levels that we haven't seen in many, many years. So I think that's indicative of a little bit of a liquidation feel. I think you could take heart in that, but by no means does that mean this is the all clear, because ultimately the big question is going to be earnings.
John Spallanzani, who sends a lot of information through to us throughout the day, said you got 7 million SPY puts that were bought today. That only happens once in a while, is what he said. This sort of gives you an idea of where sentiment is right now and where, a good number of traders think we may be going from here.
Bearishness is at levels that we haven't witnessed since 2008. And again, I think today a lot of the liquidation in certain positions, I think, is indicative that the moves that we saw in the currency market for both the sterling and the euro at its lowest level since 2002.
Yeah.
Sterling, I think 37 years, we haven't seen that type of low. So that type of behavior in the currency market, in the commodity markets, where you saw the free fall, not just for oil and natural gas, but even for safe havens like gold. You saw it in the fixed income market. You saw it universally. And then a lot of the recent favorites, a lot of the areas of the equity market where you felt as though there was this potential opportunity, this relative outperformance, let's say in a Netflix or a Tesla, there was a significant reversal in liquidation there as well.
I'm looking at what you're talking about. Euro 96, the pound 108. I mean, we're talking about decades long from the last time we've seen anything remotely close to that. I look at the VIX as I try and pull that up. The VIX is at 30. It's not like the VIX was like ripping with a lot of these other things. So, is there any message in any of that? As long as the dollar remains as strong as it is and rates are where they are, how can stocks get out of the way of that?
Well, I think they can't, and I think the contagion spreads globally, because really what happens is that the inflation from the U.S. is exported to the rest of the world, and that's what's being represented in the currency move. So there's been a lot of conversation this week about 60-40 portfolios and the value that's been restored, certainly for the 40% allocation.
In bonds. You're talking about in bonds.
In bonds, clear and fixed income, and taxable fixed income, as well as government bonds. And I agree with that. And that's where the value opportunity is right now. There's such compelling and competing yields at the same time for equity investors. And knowing that you're seeing now the inflation being exported via the currency vehicle around the world, that's a problem for domestic and global equities.
Let's acknowledge, though, the fact that we did close well off the lows. Okay? We didn't close at some cataclysmic blow-off on a Friday afternoon like, frankly, we've done multiple times since I've been doing this program. Multiple 900-plus down days in the Dow. Not that long ago, a 1,000-plus point decline in the Dow. Does that tell you that we're at any sort of oversold level where we could get some sort of bounce, whether it's lasting or not? I think people will take a meaningful bounce from here now that we've hit some of these pivotal levels.
I think there's been a lot of debate on the network this week and some degree of frustration when we use the term long-term investor, right? People say in an environment like this, how could you be a long-term investor? How could you talk about the future so, salient? Scott, I'll tell you this. To me, the market is incredibly oversold if you are a long-term investor. Would I sell my equities here at, 36.93 for the S&P? No, I wouldn't.
I know, but you sold Uber and you sold Lululemon.
But those are trades.
But what's the difference? You still took some profits or got out of stocks that you loved.
So the difference is when you think about long-term investing, you think about wealth creation. You think about establishing a series of goals and outcomes for your portfolio. You think about the long term. You don't think about market timing. You think about time in the market. There are other individuals who, everyone plays golf, but there are some who play golf really well, like Tiger Woods and Rory McIlroy and professional golfers. And I think the same thing could be said for trading. And I believe that trading is something that select people can do if they're focused properly on what risk is. And trades in Uber, trades in Lululemon, those are trades. And quite candidly, Scott, they were profitable trades in a significant downtrend overall for the market. So I think that's where you can make the distinction between
I know they were profitable
this is a trading
trades.
opportunity and an investment opportunity.
I know that